What's up, you guys? It's Matt here. So I think people in the live stream today, there was a couple of people that mentioned a lot of different positions, and it's always great to research into some of these positions, and take the time and effort into breaking these things down. Sometimes it's not really worth the time, where you have like something that has $5,000 in volume. It doesn't have the popularity to be um, a main coin or the main subject, the main character here. But we do have others that have enough volume, enough markets, enough pairings, and enough movement or popularity in general, to make it interesting for me and for a lot of the other viewers there. Now, this definitely sparked a conversation between rug pulls and heavily diluted positions, and I wanted to get into that and kind of break that down and talk about how Jasmy coin is not, or Jasmy token is not a rug pull, right? Where people are like, hey, this dropped down so much, and it's a complete rug pull. And I think there's a difference between what's actually a rug pull and what's not a rug pull. So I wanted to take you through that. So guys, if you could, make sure you hit the like button, hit the subscribe button, hit the notification bell for more videos like this one. Also, make sure you guys check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter, follow me on Patreon, those links should be down there in the description as well. But yeah, I was looking at Jasmy coin a while back. And when I looked at it before, we saw, I think it was like 10% of the total coins were in circulation, and you had majority of them, 90% of them, that were out of circulation, and which means it can be heavily diluted. And that's what I always look at first to understand what the dilution process is for an investment, because an investment is about us making money, right? You can say it's about the use case and all of that, but you're investing into it because you want to turn your $1,000 into 2,000 or into 1,300 or into 10,000 or whatever. You're in it because you want to make more money. Yes, you want to grow the project, but you also want to grow with the project and not lose everything that you invested into it, right? So when I looked at it, I saw that it had less supply. Well, recently, not recently, but months ago, right? We see an introduction of a lot of coins into the supply instead of being, at a level of like 5 billion. You're now looking at 46.3 or almost 46.4 billion coins. As you can see right above my head, 93% of the supply is out there. And I said in those videos, in those live streams, that once we see all of the supply that's introduced, now we can start to focus on it, because now we can understand the dilution that could go into it, or the dilution that was already into it, and where the popularity is. So anyways, this is currently at 0.005, which shows me that it has a lot of potential to not only increase to about a penny, but increase to a lot further than that, up to 10 cents, which you could see, a level of what, a $5 billion market cap. I can definitely see that getting to a $5 billion market cap with all the popularity and all the volume that we have seen, how many people that have mentioned it. Now, I wanted to kind of tell you that this is obviously not financial advice. I give you information so that you guys can research it a little bit more and understand where the risks are, where the rewards are, all of that stuff, because it's not 100% given that it will go to some of these higher levels. But we're sitting at a $235 million market cap. If we look at the volume, we're seeing $64.5 million in volume. That's great to see, especially in a coin that's ranked 130. To see 64 million is absolutely amazing to see there. Now, it has a ton of markets, and you can see the reason why it has so many millions in volume. You see Binance, Coinbase, you see Kraken, you see all the big exchanges that it is available to trade on. So it's not a horrible situation. Then you go into the amount of holders, and you're going to see that you have basically one larger wallet where you have 2%, and it's not going to do anything to massively affect the price. Then you have, Binance, which is holding 28%. That's understandable. They always like to control the most out of it. But still, you have no red flags here, no red flags at all, to where people can call it a rug pull. Now, I've seen so many people that said, hey, if you look at all history, this has shown nothing but rug pullish, right? It was at $2.70 right? $2.70 when it was launched in 2021, March of 2021, right? And you see it drop down all the way down here, and you're like, this is a rug pull. No, this is a heavily diluted position. This, on the other hand, is a rug pull. When you see something that skyrockets to a certain level and then has a straight line down with no recovery, that's where you call it a rug pull. This is heavily diluted, which means that it gives potential up to whatever you believe or whatever the market cap was at previous levels. Now, it has shown a lot more potential above the previous market cap, which was at an $18 million market cap, and shows strength up here at $200+ million market cap. So right now, seeing where it can go at billions of dollars worth of a market cap, it shows so much more potential in the end. So I wanted to explain the difference between a rug pull and a heavily diluted position. When something is heavily diluted and doesn't show any red flags, it has a huge amount of potential. Something like Terra Luna Classic. Terra Luna Classic was heavily diluted, but doesn't show a bunch of red flags to where people own a hell of a lot of it. You do have minting on, but you have a community behind it, and the amount of people that are centered into it. I saw this right from the beginning when I was investing in Terra Luna Classic, because it showed the potential after being heavily diluted. So any positions that you find like this, another example would be Bone. Bone had like 3% of the overall supply that was out there. Now it has 71%, and it's holding at a higher market cap. And now that you see majority of the supply that's out there, you can now make an investment into it. I would probably stay clear of it right now because it's up about 8%. I never like to invest on green days. I always like to invest on red days. But that's the point that you want to make. Rug pulls and heavily diluted positions, they're different. One has potential, the other one does not. The other one was in it just to make money, and it exists still, but it doesn't exist for you to make money from it because you don't see the volume, you don't see the popularity, you don't see anything that goes into it. So Jasmy definitely may be worth a lot more than people think. I made a video on Jasmy before on my NFA channel, on this channel actually, and that video actually got some of the most views that you have seen on this channel. You see Jasmy here at 4.6K views. And the reason is because it does have potential, and people do believe in where it's going to go. And when I first looked at that, it was about a month ago, it did show, I believe, the increased supply. And that's where I talked about how it actually might make you some money. And you could see that increased supply. For some reason, it's kind of blurry, but you can see that increased supply. It's at 93% there, and it's currently at 93% now. So look out for this position. It may be worth way more than you think. However, you want to make sure you manage your risk and don't sit here and go all in on a position that doesn't have everything together. It has the potential, but it doesn't mean that it's 100% guaranteed. Anyways, guys, like I said, hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. I'm going to get out of here. Thank you so much for watching, and I'll catch you guys in the next one. See ya.